What's up everybody? GenExDividendInvestor here. In this video I show you the second of my stocks which, at the close of market on Friday, April 9th, finished for the first time ever at a worth of over $200,000 in my dividend portfolio, and I'll tell you the story of why the stock is particularly important to me, and I'll show you how a buy and hold investing strategy can pay off over the long term. So if you find these sorts of videos as educational, inspirational, or just plain fun, then please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. So let me give you a quick recap about me if you're new here. I'm in my 40s now and I started investing over 25 years ago at my first job as a programmer. I'd always heard growing up that the stock market was like gambling, but after graduating college I started working at a small company and one of the guys on the team seemed cool and he got me to start putting money into a 401k. I used to go to lunch with some other programmers that worked with me and there were two main recurring topics which always came up. Number one was video games and number two was investing in stocks, primarily tech stocks. So these guys at my first job are the ones who really got me into investing. One of the stocks that was talked about frequently was Microsoft, probably because we were doing some programming on Windows. Microsoft is the second stock which recently crested over 200k worth in my portfolio. In a moment I'll jump into my dividend tracking spreadsheet to show you my top two stocks, and of course feel free to watch my other videos where I've shown my portfolios in detail in both Fidelity and E-Trade if you want more context. And for reference, Microsoft was under $10 a share, split adjusted, when I started acquiring some, and it has split like 5 times since then. At that time, Microsoft didn't feel cheap to me because my salary was only $30k a year and because I was more focused on modding my car with aftermarket parts and going on vacations and dating than I was focused on investing. Over time, I learned that the formula to get rich is pretty straightforward. Live frugally and invest rationally over long periods of time. Even small investments can become big if enough time passes. I imagine 30 years from now you'll be looking at today's high prices and probably will be wishing you'd invested more, even if we have a big crash tomorrow and go sideways for a decade. So let's look at how Microsoft stock has done over the years, as that can really show you the power of buy and hold investing in quality companies, even when things don't look rosy. Here we see that in December of 1999, i.e. right before the dot-com crash, Microsoft was at a split adjusted price of about $58. However, a year later after the dot-com bubble imploded, Microsoft was only at $21, which is a 64% drop from its previous peak. While that might sound harsh, realize that a bunch of smaller tech companies went bankrupt out of existence, no longer even trading anymore. Before the crash, very few people were actually focused on metrics like revenue or cash flow, and instead most of us were irrationally hyped up on the potential for the internet. So you need to realize what can happen if you invest. Stonks don't always go up. Now I want to show you how long it took Microsoft to get back to its previous pre-dot-com peak. Here you can see Microsoft took until 2016 to get back to peak, which is about 17 years. Let that sink in for a moment. It took Microsoft about 17 years to get back to its previous peak. So if you're someone who looks at your portfolio daily and gets irked if you're down 20% or something, hopefully that data point can help you put things in perspective. Of course, you have to recognize that the dot-com peak also inflated Microsoft. Thus, Microsoft holders also got to enjoy unrealistic stock price appreciation before it all dumped, so its actual pre-dot-com peak wasn't merited, so to speak. Thus, one could argue that the 17-year time frame was from an inflated peak to an inflated peak, as opposed to a normal appreciation rate, which would then lessen the time frame significantly. Another thing I came to realize experience all of this was that a stock's price isn't the same as the company. Over time there tends to be a convergence between a stock's price and its intrinsic value, but in the short term stock price is a lot about being a popularity metric, and huge fluctuations in price, either up or down, are often more about how popular something is. By that I mean Microsoft's revenue and earnings and other core financial metrics were solid before the crash and still felt solid after the crash, and in my opinion didn't justify the original spike due to the dot-com era, thus it falling afterwards is understandable. So I held on to my Microsoft stock. Was that stupid of me to hold on to it for those years where it went sideways? Well, here's a chart from Dividend Channel called the Total Returns Drip Calculator. It only has data up to 25 years ago, so this starts from 1995, and it shows if you had invested $10,000 into Microsoft and $10,000 into the S&P 500 back then, how much that $10,000 would turn into today. The top chart shows if you reinvested dividends versus the bottom shows if you didn't. So if you'd invested $10,000 into Microsoft in 1995, you would have $488,000 now if you weren't reinvesting the dividends, which is a 16% annualized return, which is about double what the overall market had done, which is 8.7%. Amazing. If you had been reinvesting the dividends all along, then your annualized return with Microsoft jumps up to a hard-to-believe 18% per year, which again is around double the overall market returns. So Microsoft is one of the best performing stocks if you look at broader time frames, though if you invest for shorter time frames then there have been better stocks. Experiences like that have made me a buy and hold investor, because I've seen what the power of quality companies can do for your portfolio, even when the market voting doesn't agree with you in the short term. That's why it's important for you to do your due diligence and have conviction with what you buy. Okay, now let's take a look at my portfolio. Okay, here we are in my portfolio. I have this sorted from my largest position to my smallest position in this dividend portfolio. Let me zoom in a bit so you can see it better. And so the top two positions are tech stocks. The first one is Apple, which is where I have 1,738 shares. You can see today the closing price, the daily change, the percentage daily change, and how much that changed in my portfolio, for a total market value of $231 grand. And it yields $1,425 of dividends per year. And then the other position, which just broke the 200K barrier, is Microsoft. I have 786 shares of that, and it went up 1% today. And so I ended at a little over 200 grand with that. And then Philip Morris actually just paid out today. And so Philip Morris paid out $1,524. Pretty sweet. And then as we look through the rest of my top 10, we see AT&T, 4,870 shares worth 146 grand. We have Altria, 2,829 shares at a market value of 145 grand. Johnson & Johnson, 900 shares, 145 grand. Philip Morris, 1,270 shares, 115 grand. Pepsi, 768 shares at 109 grand. 3M, 544 shares at 107 grand. ExxonMobil, 1,893 shares at 105 grand. And Duke, 1,077 shares at 105 grand. Those are my top 10 positions. And these are the other ones. And we can see that on Friday, my portfolio ended up 0.46%, which is about 10 grand, almost 11 grand. So the overall portfolio now is about 2.4 million, and it generates about 81 grand a year. And then we can see that the portfolio's average weighted dividend yield is 3.38%, and the portfolio's average weighted 3-year dividend CAGR is 7.57%. And I like to look at it this view so we can kind of pull in all that data at one time. And we can see that we are in April right now, and this is anticipated to pay out about $6,400. And then you can see month over month in May, I anticipate $5,300 to be paid out in dividends, and then in June about $8,500, and then again to $6,400, etc., etc. Okay, awesome. So while it's fun to see a milestone like hitting $200,000 worth of a single stock in your portfolio, I'm confident that the market will eventually crash, may go sideways for a while, and then will continue trending up. And investors are made when they take a punch and then keep fighting. Everyone feels like a winner in bull markets. Investors are those that can stomach the bad times and keep moving forward. Now, if you watched my video called The Time I Sold My Stocks, you would know that I sold out of all my stocks just relatively recently and then got back into them. That sounds crazy, and it was, so I recommend you watch that video for context. Anyways, even with the selling and rebuying, I'm already back up about 57% on Microsoft in about 2 years, which is over double what the market has returned in the same time frame. Right now, I personally feel the markets are overheated and have been overheated for many years. Translation, it wouldn't surprise me to see a major correction. When that happens, it wouldn't surprise me to see my Microsoft worth 100K in my portfolio rather than 200K. And that potential reality doesn't bother me, because I'm confident that when my great-grandkids eventually inherit my portfolio, my Microsoft position will be 7 figures. That will probably be far in the future because my kids are still kids, but you get my point. And even if the market does crash, I'm also confident that Microsoft will continue paying me dividends. Thus, they are literally helping to pay my mortgage and my healthcare and such right now. So it doesn't impact me much if the market crashes. A crash makes some numbers on my spreadsheet smaller, and yet my passive income numbers tend to keep going up even in crashes. That all being said, I could also argue that in the short term we'll see a booming market, assuming the vaccines continue to function and people get back to work and such. So even though I think the market's hot, I've learned I can't predict when we'll have huge corrections, and thus I stay invested. Again, it's after crashes and during the sideways years that your conviction and ability to stay invested will be tested. Do you have what it takes? My goal is to try to show you what's possible if you persist through the hard years. That's a big reason why I do these videos. It's not to show off some silly portfolio amount. It's to inspire, educate, and entertain you to how powerful dividend investing is. Now I'd like to call out a new Patreon aristocrat who just signed up. So thank you to Chris P. Bacon. Awesome name. Also, I wanted to mention that M1 Brokerage has a promotion running for a free $30. The way it works is you click on my M1 referral link in the description of this video, and then either open a brokerage account and fund it with $100, or open a retirement account and fund it with $500. Then you need to keep your money inside the new account for 30 days from the date of deposit to get the free $30. I'm not sure how long M1 will be running this promotion, but for now it looks like it's for all of 2021. So check out the details to verify and then use my M1 referral link. If you've made it this far, then please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. Finally, I highly recommend you join my free Dividend Discord, which has thousands of dividend investors on it and it's growing all the time. Thanks for watching, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.